So many videos on the channel, most videos I put out on this channel are just around what's going on in the market, my opinion on what's going on in the market, right? Stocks I'm looking into, stocks I'm buying, moves I'm making out there in the market, things like that. This video is going to be very, very different. This video, I feel I need to do this video, to be honest, because a lot's changed over the past few years. And I want to talk about kind of on the YouTube front. I want to talk about portfolio strategy. I want to talk about portfolio diversification. I want to talk about my feelings on how many stocks I feel somebody should hold in their portfolios, because my view has changed over the past few years. We're going to discuss that. We're going to discuss hedging of portfolios. My views have changed there as well over the past few years. Now, some folks believe that if you are changing, that's not good. They definitely view that, right? And I'm sure you have over time, maybe you've changed, right? And you might have heard something from a friend or whatever, and like, you change, man. And a lot of times people think if you change, that's a bad thing. They don't like that, essentially, right? But the fact I've learned over time is, in order to become the best you at whatever you're trying to do, you have to change over time. If you are not changing over time, the bottom line is you are getting likely worse at whatever you're doing, essentially, right? And so change has this very negative kind of, connotation around it. And unfortunately, it's just not the right way of viewing life, in my personal opinion. If you're not changing, you're not growing. You're not being present. Change is essential in life, right? And even my views on the world have changed over the past 10 years or 20 years. My views on what it is to be a man, what it means to be somebody that's taking care of people, that is helping people, and those sorts of things. And those thoughts change over time, right? And it's part of life. You should be changing over time. You should be getting better. And you're never done. You're never a completed project. There's no such thing as perfection. There is such thing as striving to be perfection, but there is no such thing as perfection. And I think that's important for all of us to understand. You have to be changing in life. If you're not changing, you're not adapting, you're falling behind, essentially. There's a few things I don't change in my personal life, and these I don't really speak about very often, but what they are essentially is gratitude prayer. I haven't missed a night of prayer in 20 plus years, regardless of whatever was going on in my life. And I don't pray for, I hope this happens and that happens. Like a lot of people, if they do pray, they pray for all these things and whatnot. I never do that. I just pray that I'm thankful enough to enjoy my time here, right? And have abilities and those sorts of things. And that's always been my approach, right? Family and keeping those who are close to me, right? Competition. I love competition, man. I love it. I just live for that type of stuff. Like, I'd rather lose than not play at all. There's a lot of people that can't take the loss. I can take the loss. I'd much rather lose than not play at all. I love competition, and that's never changing with me, right? And meditation is something I added a few years ago, and basically every single night I meditate, and it's helped me tremendously, absolutely tremendously. And for anybody who cares a lot about the competition, success, money, those sorts of things, oh my gosh, like meditation, I don't even care if you care about those things. Like meditation, like I feel like every single person in the world should do 10 to 15 minutes of meditation a day. Every single person. Like, people don't even know what they're missing out on. They have no clue. And it's kind of sad because I had no clue. I had to seek it out. I felt a lot of, this is years ago, but I felt a lot of anxiety and anxiousness and all these feelings of just it's very debilitating. And, just couldn't really figure out the answer. And then I found mindful meditation. It changed my life. I noticed a difference in the first week. It was incredible. And it's unfortunate, more people don't know about that. But anyways, those are things that don't change in my life. Many other things can change, and we're going to speak about those, right? So before we get into some of my opinions on portfolio strategy, hedging, a lot of different things that have changed with me over time, I want to speak about YouTube. And I know different folks have come across my channel at different time points. I've been doing this for a long time. Like in YouTube years, this is 100 years, man. I started in 2016. And my channel first got popular in 2017. So this whole being more popular on YouTube is nothing new to me. Like this has been this way for a long freaking time, okay? And the way I've done videos has changed over time. Back in 2016, 2017, it was like I would show some like text graphics and I would just kind of like talk to the camera. I used to record in this little GoPro camera. Back then I think it was the GoPro Hero 4 if I recall, and little text graphic would pop up on the screen. Sometimes I would show some images of, you know, balance sheets or whatever it was every once in a while, but that was kind of my video format back then. Then 2018 through 2020 was more whiteboard videos, some image videos. This is definitely a very nostalgic period for a lot of folks. Not going back there, just to be quite honest. I'll never go back there. Well, I don't want to say never say never, right? But I have no interest in going back there. That's a time period that I know a lot of people are very nostalgic about. Oh, the whiteboard videos. Gosh, you know, go back and watch those again, man. You know, there's a better chance that Drake drops Take Care Part 2 than me going back to those whiteboard videos. Okay, it's just that was a moment in time, and if you want the nostalgia, you can go back to watch those old videos. But I evolved over time, and that's not really my thing anymore, right? Is getting out in front of the whiteboard and you know, with the marker and everything like that. It's just not my thing anymore, right? And then I would do a lot of things that were like images and things like that, right? 2021 was my lazy year, and I'll just be honest. It really started at the end of 2020, but very, very lazy. I got on YouTube. I would just like screenshot and scribble on my iPad some stuff and whatnot. Extremely the laziest I was ever in my YouTube journey. And the reason being, I'll just be quite honest with you guys, right? And I always believe like honesty is the best policy. I was making so much money from stocks, like, you know, at some point in time, you stop to even care about other things because you're making so much money in the market. I mean, when there's a roaring bull market, it's not uncommon for me to make between $50,000 and $200,000 a day. Not in a week, not in a month, not in a year, in a day. And so when you got money pouring in like that, you start to get a little, let's just call it de-incentivized. And so, you know, I always say like the number one thing that will likely take me away from YouTube eventually will be when my portfolios get so big that like the dollar amounts, like imagine someday when my portfolios are making $1 million plus move. At that point in time, oh gosh, like you start getting very, very de-incentivized to do anything, right? Else other than just focusing on kind of what's going on with your portfolio and those sorts of things. And so there was just a very lazy time period for me. And, you know, that was the least motivated I was on YouTube ever. Also, it was a different time period at the end of 2020 and into 2021 around just very hypey and just, it was an ugly market. We all know that. I don't want to even go back. It's just like a sad story that I don't even want to go back down there, right? Then 2022 was kind of Loom 1.0, and then this year kind of Loom 2.0. For my main set, I got a nice camera now. Got some better kind of audio going on for the main set at least, right? And trying to just bring different images and showing you folks different things that, you know, I maybe haven't shown in the past and whatnot, right? And so my styles adapt over time. This style will eventually not be the style someday. Like, I don't know when, but eventually, you know, I'll move on and do something else. Because the thing with me is I'm also a creative, so I can get bored of stuff. And I like to keep it original, and then I end up switching up and I do something else, right? And then there'll be some day when people are like, oh man, I remember those, when you used to do the Loom videos, man. And it'll just be like that group will be nostalgic about that, right? And usually whenever you found somebody, you're usually going to fall in love with whatever, if you really like them, right? You're going to fall in love with like whatever their thing they had going on at that time. And then as they adapt and change, you can either like adapt and change with them over time, or you kind of get stuck in that past of like that feeling that you had during that time period, right? When they were, you know, whether it's a music or a video or whatever it is, right? Now, in terms of, you know, because I sometimes get, you know, the comments about like thumbnail images or titles of videos and things like that, right? You know, I understand. Like sometimes it can be like, woo. But my thing is the tough thing with YouTube is, you know, I've tried it where I've just like, you know, stand there and do like a stoic image or something like that. And it doesn't work. It produces massively less views. And so what I try to do is get across the feeling of the market, right? And if, you know, the feeling of the market is like euphoria and like we're making money again and things like that, you know, it's kind of that Floyd Mayweather laugh in your face type attitude, right? And if we're very concerned, you know, I do that concerned face, right? And if it's a moment in time when, you know, it's down and out, you know, it looks like I'm super depressed, like, oh my gosh, we just lost all our money. And that's just YouTube, man. You know, in terms of my personal beliefs and those sorts of things, no. Okay, no. Like, somebody yesterday was like, oh, there's such a cocky, image and such a cocky, title and things like that. And it's like, it's YouTube, man. It's YouTube. You have to get across expressions that people are feeling. And if people are making a ton of money, then they feel like, ultra confidence going on, right? And they feel super down and out when the market goes down. So you have to convey that in the images, in the titles, or it's just going to produce less, right? And like in terms of YouTube finance, like I'm one of I don't even want to sound cocky, but I'm one of the greatest to ever do this, right? There's only one other finance YouTuber in the world that has 4 silver play buttons. One. That's my neighbor. We have a combined 8 of them, right? And I have a 5th that will be an all-time record for YouTube finance that will be coming next year for the reaction channel, right? Because that will likely hit 100K next year at some point. So, I kind of know what I'm doing at this thing. I'm pretty good at it. And to stay relevant this many years is not easy. It's not easy. You have to really be good at this stuff nonetheless, okay? Now, let's talk about portfolio strategy. Let's talk about stocks. Let's talk about some of my changing opinions over time, right? Hey, Jeremy, I remember back in this is from Patreon, by the way, from the new Patreon. Somebody left this comment. Said, hey, Jeremy, I remember back in your old videos in 2019, you had a great video on when starting a portfolio with less than 10K in it. Do not spread yourself too thin on multiple stocks. Just curious if this strategy changed. I noticed you already have 8 stocks, 1 hedge in this portfolio. And the answer to that is yes. My thoughts and beliefs have changed on portfolio diversification in terms of how many stocks to hold. And I'll go through that in just a moment. But why has this changed? There's 2 core reasons why this has changed over time. From I used to believe and for me, even on the come up, right? When I was building my portfolios, it was very common for me to have between 3 and 6 stocks. 3 and 6 stocks, which is pretty dang risky because you got the whole farm riding on just a few companies, right? And they used to be my belief. They used to be what I wanted to do, and that used to be what I did do, right? But my belief has changed for 2 core reasons. The first of these reasons is these stocks, GoPro and Tattoo Chef. Those definitely changed my perspective on when you get it wrong. And it's great when you invest heavy and you get it right. But man, when you get it wrong, it is painful. And in both those situations, I learned an extremely painful lesson about going too heavy into one stock, right? And in GoPro, I lost a significant. GoPro hurt me worse than Tattoo Chef. The dollar amount for Tattoo Chef's exponentially bigger than GoPro, but that's because my net worth is exponentially bigger than GoPro. GoPro hurt me worst financially in terms of my net worth than actually Tattoo Chef. But nonetheless, I learned very hard lessons from both those stocks, right? And by the way, Tattoo Chef, I'm still invested in. I still own my shares, but it's not a very optimistic outlook. Let's just put it that way. It's gonna take miracles now at this point in time, right? To have that one survive, get through this year, and then make it out to the other side to hopefully, see much brighter days ahead. It's tough sledding now at this point, and so those stocks definitely changed my perception of this. The other thing that changed my perception of this is being on YouTube for 7 years, 7 years, and I've been able to see so many other retail investors and see so many comments and get so many people message me. I mean, literally, the amount of people that message me over the past 7 years might be 100,000 plus. Might be 100,000 plus. It's insane. And the number one thing I've seen with folks over time is playing the game too risky. The number one mistake I've seen, where these folks will go all in on 1 or 2 stocks, or do a situation where they go all in on some call options or some even put options, depending upon what way they're trying to play the market and things like that. And they absolutely lose everything. They wreck their portfolios, or they lose so much that it takes them, years, many years to get back. And they ultimately, many of them never get back because they try to get back too fast, and they go down the same route that put them in that place. So they maybe lose a ton on one because they went all in 1 or 2 stocks, or they were all in let's say call option or something like that. And then they try to chase it. They want to get it back. And in gambling, if you're familiar with gambling world, right, which the stock market can be turned into a casino, right? There's inherent risk when you invest into the markets. I don't care if you're investing in an index fund or you're investing in a dividend stock or a growth stock. All of them have risk. They just have different levels of risk and risk tolerance, right? But in actual gambling, like casino gambling we're talking about, sports betting, those sorts of things, what we call that is basically trying to chase your bets. You're chasing your bets, and you're trying to get it all back. And so next thing you know, you lost this game. Now you're trying to do a parlay because you need to try to get that previous money back. So you need to take even more risk to try to get it back. Right? We call that a Wall Street bets in the stock market. And ultimately, it's not the right strategy. And so those are the things that changed my mind over time, is seeing how many people fall into that pattern of just like going way too heavy into option plays or just a couple stocks or just one stock. The amount of people that just go all in one stock is immense, and those people pay a huge price. And what compounds it worse is many of those same people have such a huge risk. If you are going all in one or two stocks, especially one stock, you have such a huge risk tolerance that you're the same person that is more likely to get into call options, short-term call options. You're the same person that's much more likely to get into heavy margin. You go all in one stock or two stocks on heavy margin, you will lose your entire portfolio. I guarantee it. You'll lose it all. And so, nonetheless, this is something that definitely changed my outlook on this over time. So, in terms of portfolio size, first thing, you got to have GVD strategy, in my opinion. This is what I do essentially, and I think it's absolutely like the best way to invest in individual stocks. Basically, growth stocks, value stocks, dividend stocks. Growth, value, dividends. You got to have a mix of those in your portfolios, in my opinion. Now, under $100,000, I think 10 to 15 stocks is the appropriate amount. Between 100, this is like more of a starter portfolio there. When you're in 100,000 to under $1 million, I think 15 to 20 stocks, this is like a stage where you're getting more serious about the market, right? You're starting to build up your portfolio, and I think that's an appropriate amount of stocks, 15 to 20 stocks for that amount of money invested. Now, once you get over $1 million, then I don't want to call you a professional, certainly, right? But you kind of need to start approaching your portfolio more like a professional money manager or ETF manager would approach it, right? And many times they're going to hold 20 plus positions. And at this stage in the game, right, you're going to have likely a lot more time on your hands to look into companies, to keep up with what's going on in the markets, to keep up on what's going on with trends, to listen to conference calls. You're just going to be able to go way more in depth because you have a lot more skin in the game, as they call it, right? A lot more money invested. The person with $5,000 in their account, they might not have as much, so they can't keep track of as many stocks. So 10 stocks might be appropriate for that person. But if you have this amount of money, 20 plus stocks is perfectly fine. And so that's my ideal kind of portfolio sizing for different, basically portfolio totals. Now, the other thing that comes in play is also your risk tolerance. How much risk do you want to take? And that's different for every single person. You have to ask yourself that, right? You might be a person that, ultimately has 50K in the market, but you don't want to be in just 10 stocks. You want to be in 20 stocks. Fair play. If that's the way you want to do it, that's the way you want to do it. Now, the thing I do caution you against is being in too many stocks, because I have seen it before where people go into 50 stocks, 100 stocks, and it's like, if you're going that many, then at that point in time, it's too many stocks to even keep up with. There's no way you're listening to, 59 conference calls. I mean, I will, but you won't. I'll listen to 59 conference calls. You won't listen to 59 conference calls, okay? That's the bottom line with that. And so that's just very unrealistic. And at that point in time, you might as well just throw it in an index fund or something like that, because you're spreading yourself too thin at that point. This is kind of the happy medium. I call it diversity, but being there, right? Hedging. So for a long time, I never believed in hedging a portfolio. And that changed recently, and I'll speak about why that changed. And a hedge is essentially, just think of it as a way that you can protect yourself in the market, right? If there is some sort of big downside in the market, you can capitalize from that, take profits from that hedge, and then pour that into your long positions, right? And so I'm now a believer of doing some sort of hedge going into every single year. And go in every single future year, I now plan to do some sort of hedge, essentially. And this is something I didn't do for a long time, and I got away with it. But ultimately, especially as your portfolio gets bigger and bigger, it makes sense, especially when you have, potentially millions of dollars invested. It makes sense to hedge, okay? And so the thing that changed my perspective on this was 2022, because I knew in 2021 that the market was trading rich, and I covered this a million times on the channel, and I showed you guys, what P's were trading at, especially for large cap stocks and whatnot, and we knew there was significant risk. Now, I didn't know the Fed was going to be nearly as aggressive as they were. If I would have known that, I might have left the whole market in general, right? But I don't think anybody knew how insane the Fed was going to go in 2022, going into 2022, right? But the bottom line is I knew a lot of stocks were trading very frothy. I knew that, right? But I didn't hedge myself at all. If I could go back in time, what I would have done is just a SQQQ, hedge, boom. Not a ton of money, just enough that in case the market tanked, I made some good money. And my return on that would have been likely 90% plus. 90% plus I would have likely made if I would have hedged myself properly there, right? I could have took that money at some point. I would have probably took it probably in the summertime when the market was really tanking hard, right? Or I would have taken it late in the year if I really wanted to push it out. I would have been able to take that money and go ahead and, essentially put that into long positions at very, let's just call it discounted prices. But I didn't do that. And so I left myself wide open. And as the market tanked and the NASDAQ went down 30+%, right? At the lows, the NASDAQ was down almost 38%. All I was long, and I got absolutely shredded, right? Portfolios got shredded and just down. And yes, I was able to buy the dip, but still, like, it's not fun to not be able to at least capitalize on that a little bit, right? And so here's kind of my outlook on this. This is what I shared with the private stock group recently here, okay? I said win-win situation. The market is much more about putting yourself in a situation where you can win several ways. Here's the way I look at the market the next 12 months. The market goes flying up, great. My stock portfolios will explode with gains. Next thing you know, I'll be back to 2021 portfolio totals. Market tanks hard, great. My SDAO hedge prints money, and I flip those into long positions at some point this year. Those long positions would be at extremely low valuations, assuming the market tanked hard. Market is flat for the next year, great. I get to buy countless stocks at what I feel are very attractive valuations as a long-term investor. Win-win-win. Put yourself in a position of power so you can thrive and survive with whatever the market throws your way. We cannot control if the market goes up or down or flat. We can control how we position in our diversified, right? And it's 100% like the truth, right? We can't control if the market's going to go up or down or just be flat over this next year. But there's ways you can take advantage of this market regardless. And the bottom line is in 2023, I'm set up in any situation. Market goes up a ton, my portfolio is going to tear it up. Market go down a ton, my SDAO is going to print money. If the market's flat, I get to load up on stocks at very cheap valuations, right? Number one most important thing in long-term investing, what is it? Say it with me, more income than expenses. As long as you got that down, you're always in a position to buy stocks every single month, maybe even every couple weeks, right? And you're always in that position. So you're not scared if the market's flat. You're not scared if the market goes down. It means you can just buy more shares for cheaper. Set yourself up into a win-win-win situation. Hope you guys enjoyed today's video. I really appreciate everybody taking the time to watch this one with me. I really looked forward to recording it. I appreciate everybody. Much love as always. Thanks for being subscribed and have a great day.